What up, everybody? What up, what up, what up, what up, what up, what up, what up? Is it going? Trickling in, trickling in. How are we doing, everybody? How's everybody doing? How did we do today? Did we have a good trading day? Decent day? Didn't trade? Okay. Take that. I honestly didn't expect to trade very much. Tesla just kind of came out of nowhere earlier in the morning. And work, I feel that. Good day. Nice, nice. Caught the whole move on cost. Nice. Been back testing since market closed till now. I love it. No trades, no trades. All good with that. No trades. I think it's an okay day to have completely sat out. Caught in that crazy XPX play. No trades. All right, so I'm happy with no trades for you all today. Just a quick glimpse of why. If we look at the SPY chart here, this daily chart did give us the breakdown sort of that we were talking about, right? We've been watching this range on SPY, not just we, everybody, even our mother has been watching this range on the SPY. We did get the breakdown today. However, I kind of talked about it in an Instagram reel. The breakdown came on a Thursday after lunch when most people were done for the day or like out of buying power for the day, and a day before the data came out. So it's like, if you didn't catch this downside move, you're probably you and everybody else, right? Like most people didn't catch this downside move, right? So don't feel too much FOMO from that. There was a nice down move to be had outside of this range, but it occurred very quickly and at the very end of the day, right? So if you didn't catch it, don't be mad at yourself. Don't feel FOMO. Don't be upset or anything like that, even if you've been waiting for it. And then if you didn't catch Tesla to the upside this morning, or you just chose not to trade, don't worry about it. There's going to be a million other trades. And again, while you might be looking and saying, "Oh, Jake, you saw the number that I had today," or whatever the case may be. Got to ignore that, right? Because while SPY was in this range, yes, I caught a nice trade on Tesla, but for me, it's actually a relatively tight stop on the entire position, and I was keeping, maintaining my discipline throughout the whole thing, right? And it was still a counter trend trade overall to the overall market, despite the fact that it was setting up nicely individually. Right. So don't want you all to feel any FOMO about that. And most importantly, I am excited to dive into tonight. We're going to wrap up where we were talking about last time, and then we are going to cover and move into levels a little bit, which are my favorite lesson, right? This is truly my favorite lesson because the levels are special. The levels are, for me, I spent years, we'll talk about this more, searching for strategies on, how to find the right supply and demand levels, right support and resistance levels. Then I found these through Eric at Major League Trading. He's the one who taught me how he got levels, and I took his strategy, adapted a little bit, but it's mainly the same. And for me, it's like, oh my God, I'll never use another level system in my life, right? Like everything else is, I don't want to say trash, but I don't use anything else. I don't even consider anything else, right? So here's my request for you all throughout this lesson. When we start diving into the charts and I start doing examples of how to draw the levels, how to do all this, you're going to want to ask a bunch of questions. I'm going to ask you to refrain. We were fortunate enough to have Mike and Ron on again tonight. I sent them both some cash for dinner. So hopefully they got delivery from the last lesson and delivery for this one. So they will be here to help answer questions, but I don't want you all to be asking, like try and just let the lesson be. Don't hesitate to ask if you're confused, right? But let the lesson be, because most mentorship students in the last one watch this lesson 4 or 5 times. And I think you might have to watch this lesson 4 or 5 times. When I learned from Eric, I asked him enough questions to learn it 4 or 5 times, right? Like you're not going to grasp it. Some of you might, but you might not grasp it immediately right off the gate tonight. So don't hesitate to ask questions if you're confused, but maybe try and save some of the questions about the levels towards the end, because I probably will cover and answer them as we go. And we have a lot to cover tonight. So let's try and keep the rhythm of it, smooth. Okay. All right, man. So let's first talk our agenda. We're going to review a little bit of stuff that we talked about last night. This should really mention failure patterns because that is what we're going to mostly cover tonight. And then we dive into the levels, right? So again, For us, we approach trading with a triangle offense systemic approach, right? We want to be reactive, not predictive, right? Or not forcing something into a trade that's not there, right? Almost all of our trades are based off of trend analysis. So we did a deep dive into trend analysis in the last lesson, reviewing higher highs, higher lows, lower highs. And we did that on the daily frame, right? And we made sure to clarify that all of that is applicable on literally every time frame, whether it was a daily or a 2-minute chart, it does not matter, right? So then we dove a little bit more into the 3 pillars of our strategy, right? Candle analysis, trend analysis, and levels, right? So we have covered a lot on candle analysis with buy and sell setups. We're going to cover them more tonight with failure patterns. We've covered trend analysis a lot in the last lesson, so we won't cover that too much, but then in the next lesson, we're going to talk a lot more about multi-time frame analysis. And then tonight, we are going to be talking about the levels, of course, which are derived from the hourly chart, right? So that should really, this was from, sorry, I copy and pasted these slides from the last one because it was review. So, all right. So we talked about buy setups, right? So just a quick review of buy setups so that the definition is fresh in your head. These are most applicable during with trend potential plays. We don't want to be taking these when things are stuck in a range. And ideally, we want to be taking them at levels because that provides another level of confluence and confirmation to our trade. So the firm definition that we are going to be using is that during an uptrend, we wait for something to pull back to establish a support level, and then a bar or a candle to take out the previous bar's high. We place our stop below the signal bar's low, right? Now in sell setups, it is the exact same thing, but just in downtrends. These are most applicable with trend plays. During a downtrend, as you can see here, you wait for a rally that establishes resistance, and a bar to take out the previous bar's low, right? Placing your stop above the high of your signal bar again, right? So these are our buy and sell setups, right? Now, with buy and sell setups, what you might have noticed in the past few days after having learned them, and now, or really just, I guess, yeah, past 2 trading days after having learned them, is that you probably saw 10, 15,000 buy or sell setups occur, especially if you were watching like a 1 or a 2-minute chart. They happen all the time, right? Especially on these small time frame charts. So if you just get stuck and focused on trying to take every one, or you use that as your only rationale for taking the trade, you are going to get yourself into trades that you shouldn't be taking, right? These buy and sell setups are our mechanism to find entries. We construct our trade thesis other ways, but it's these buy and sell setups that we use to find our entries. Right? So it's important to remember that, and that's important. That's kind of why I emphasize that I don't want you all gunslinging on the buy and sell setups that you see constantly, because the other thing about buy and sell setups is that it flows really nicely into one of our previous rules, which is that one of our previous rules is when a candle breaks a previous candle's high or breaks previous candle's low. And I know you all are somewhat of a quiet batch, and I told you to stay quiet on the questions, but just answer me this. And then I should get 10 plus responses within the first 10 seconds. When a bar breaks a previous candle's high, what would we expect to happen? If we break the high of the previous candle? Just show me it. Continuation, bang, bang, boom, 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 boom. I love you all. Thank you for that. Just shows me, I want you all a little, you're into it, right? Higher, exactly, right? So now, when we fail that acts as a clue in the other direction, and especially when that failure is occurring where it should work, right? AKA in a buy or a sell setup, right? So for this example that you see pulled from the chart here, you can see that something turns and pivots right here. Once it pivots, it starts to develop a clean little uptrend and move up, right? Again, we don't have any previous data on this chart, so we just sort of have to assume that we're in an uptrend, right? And you can see here we have a nice little 2-bar pullback. Within that 2-bar pullback, we have the 3rd bar here stop and set as a doji, and nicely it changes color for us as well. This allows us to take an entry on the break of that bar's high, and allows us to taste our stop below this bar's low, right? Bang, bang, boom. I think I can actually use Zoom to draw. That would probably be better. Yeah, okay, cool. I'll do that from now on. Right, so with this, we have a buy setup that has triggered right here and then, right? So within this buy setup, we actually do get a relatively nice move up, right? we get a push up here, get another push up, but rather than taking out the local swing high, right? Rather than taking out the local swing high, this bar here actually ends up coming out and taking out this bar low, showing us that we have a failure to go higher pattern. Why? Because based on our system and based on what we know, when something is in an uptrend, pulls back, establishes support, and a bar takes out the previous bar's high, we should continue higher. So if that fails, it is a failure to go higher pattern, right? And that is one of my favorite patterns for looking for short entries, is off of something like a failure to go higher, right? So it would be very ambitious in an early short, but one of the ways that you could potentially look to play this is by taking a position as we break below this, right? And placing your stop above the signal bar's high. Now, what would this be? Now I'm looking for three letters here. Looking for three letters. What would this be right here, right? If we were to take that short entry, what three letters am I going to use to describe this area? PLH, hell yes, everybody, PLH, exactly, right? So now let me make a case and point about this, right? Is this considered a sell setup to us, right? Is this considered a sell setup based on what we know in this chart? Is this considered a sell setup? The answer is no, right? The answer is no. Why? Because we are in an uptrend, and it's not a sell setup when we're in an uptrend. It would represent a failed buy setup, right? So this is a important distinction to have between the two, right? So we have a failure to go higher and a potential short entry. Now, some people and some very aggressive traders, especially say we had a key level here that we were watching, right? This is actually a great example. Let's say that we had a key level here that we're watching, and it's 100 for AMD. AMD rallies up into 100, fails that first test, pulls back, rallies up, and fails a buy setup, right? And starts to trigger a PLH. That would be an example of a time where you could potentially take a short entry based off of a failed buy setup, right? When you have different, again, we would want more different things lining up. I'd want a week daily chart under the opening print, a few different other things that we'll talk about. But a failure to go higher pattern could be the thing that triggers an entry for us, right? It's not always going to be a sell setup that triggers an entry for you. It could be a failure pattern in one direction or the other. The important part is that this remains not the overall thesis of our trade, but it is just the way that we find an entry into the trade, right? It's just an entry tool. So you need to have more other factors lining up. If you just start taking every buy setup long or shorting every failed buy setup, you're going to find yourself stuck in a lot of chop, because this is the way markets move. The way I describe it is that markets are moving. It's just a series of buy and sell setups, right? If you drill down to any time frame, it'll be a series of buy setups that works until one fails, and then we go into a downtrend, and there's a series of sell setups until it works until one fails, and then we get a buy setup, right? That's the way market moves. So these are going to be happening at all times. So if you only take them, like, I can't stress this enough, you're gonna blow your account, because it's gonna be death by 1,000 cuts. Because you're gonna be fine with your one. You're going to be fine with your one candle stop losses. They're not going to be huge stops, right? They're not going to be huge stops, but you're going to have death by 1,000 cuts to your account, where you just end up taking so many trades that doesn't work. So these are the ways that we find our entries, not the sole reason to take the trade. Okay. All right. Popped up the question real quickly. Do we wait for the candle to close? So, LeVar, I would encourage you to go back and rewatch some of the last lesson, because we emphasize this a lot. That's not a yes or no answer, right? Because in this example here, I guess never mind. Let me pause, because you're talking about on a failed buy setup, would you wait for the candle to close? Yes, right? For the same rules that we established last night, right? For the same rules that we established last night, which is that on a color change, at least while you're learning and while you start to recognize these more and more, let's just wait for the color change bar to close, right? And at least for you to get a little bit of it there. So it's a little bit, so you don't ended up getting stopped out, right? So do we wait for a retest of the first high? Not necessarily, Gabriel, just because in my opinion, this would kind of act as the PLH, right? And so if it doesn't go up and tick or take it out and exactly double top, you don't want to be, a dick for a tick waiting for like that. this trigger is just as valid as it would be if it were to go up, you know, a little bit higher. So I think that's what you're asking. But if not, no worries. So okay, I closed the chat box for now. I closed the chat box for now, and I'm going to keep moving through in a fluid manner, right? So this is a good example of a failure to go higher pattern, and I actually chose this one very specifically because the thing that I mentioned at first is we have to assume that this is an uptrend, right? Let me take you to this chart. Spoiler alert, it's not actually an uptrend. It was just a very clean example of a failure to go higher pattern. Let me get these annotations deleted. Okay. It was within this larger downtrend, right? So we have established over here on Zoom, and this is choppy action, and it's tough to discern where you would establish lower highs. But as soon as we break these pullback areas right here, right, we have gone into a confirmed downtrend, right? We are pulling into lower highs, lower lows, right? So I pulled that example because if you don't have all of the information, you're not going to fully, you know, get the picture. But again, with this as our information, this is an uptrend, pull back to a buy setup, right? And it turns out being a failed buy setup with the information that we have. If you're too zoomed in on a chart, if you are too zoomed in on a 5-minute chart, and this is what you are watching, you are going to miss the fact that that is not a failed buy setup. That's actually just another sell setup because this whole move here is within a downtrend. So rally up to here is not a pullback within an uptrend, right? It's a sell setup trigger. So that's where you take your short entry. And hey, guess what? The sell setup pivoted and it's trying to turn a little bit and it's trying not to work. And guess what? It's invalid back over this high, never gets invalidated, remains in play, and actually offers a second short opportunity at this new sell setup right there. Right? So it's very, very important that if you find yourself stuck, watch out that you are not overly zoomed in. It's punny when we're looking at Zoom. But when in doubt, zoom the F out, okay? Because if you take something thinking it's a buy setup and then look out and see larger that you're actually looking at what would be more of a sell setup, you're not going to feel so stoked after that trade, right? So that's very, very important. Okay. Does that make sense to everybody? Is that a knock? I mean, the knock. I don't, people are getting kind of fixated on this knock thing. And I want to kind of reiterate, knock is like a very general principle about support and resistance. Knock is like the concept of the idea is that the more times a level is tested, eventually it's going to break and break with power. Right? I don't want you all to like look at this and be like, because I don't see this as a knock, right? And I don't, yeah, we have resistance there and we're going up to test it the second time, but like really the knock is a general principle and general understanding of trading. It won't be, it's not like a setup. It's not like something that you make, oh, I bought this because it was, you know, a knock setup. It's like, no, you have other things lining up for you. It looking to break resistance was one of them, right? So don't get overly fixated on that, okay? I would have thought it was an uptrend since that push up broke the previous high. Well, again, this is sort of where it depends because trend analysis is not going to be picture perfect every time, right? If trend analysis was picture perfect every time, then ultimately what all charts would look like is, where's the brush tool? Brush tool. Okay, here we go. If every like that, but if a trend was perfect, if a chart was perfect every time, a trend was perfect, it would just look like this, right? Pull back to retest the former lows and go up, right? And unfortunately, this is not how companies move, especially with earnings reports, right? Being one of the main thing about that. So for me, I personally really wouldn't consider this a lower high on ZM. I suppose you could, but for me, that's sort of consolidation, breaking down from the last one. But again, it kind of also depends on how ZM moved from here, right? If ZM had further, this is why, again, it's not one size fits all and nothing is going to be perfect in trading. And this is, I'm going to emphasize this a million times tonight. This is an art, not a science, right? Because if Zoom had pulled back here and held this pullback, right? And it had held, this little area right here, right? Then that would have been, actually acted and made sense. Your theory would make sense. This would have been the lower high that would make lower. But exactly what Gabriel said, right? According to bar by bar, which is where I get a lot of this information from, I just kind of restructured how he did it because he doesn't speak English. Sorry, I'm getting distracted by the question box now. Yes, Blue iPhone. We will absolutely go over how to choose strikes as expiration dates. Right now, we're covering charts. So this is what I meant on the. Let's try and keep the questions to the to stuff that we're covering right now, right? So we can just stay focused and stay on the right track. 100%, we're going to cover choosing strikes and expiration date. Yes. Okay, so what the bar by book would mention here, Christian, and just to sort of wrap on this, is as Gabriel said, this is not a major lower high, right? Right here is a major pivot point. That is a major lower high, right? That is a strong pivot point as opposed to this, which is more of a consolidated area, right? Nonetheless, this is an example of a sell-side triggering there, but as we're seeing here, it would be a failure to go higher pattern, right? Now, on the opposite side of that, we have failure to go lower patterns, extremely similar, right, to failure to go higher patterns just to the flip direction. Something that has a reason and attempts to go lower, yet fails, right? So in this example, we see something where it's in a consolidative state here, right? It's kind of pulls back, pushes up, remains flat for a period of time on end, right? These are all weekly charts, right? So you should all see them. The reason I'm showing weekly charts is that I want you all to see the power of these, right? This pulls back, consolidates here, pushes up, and actually, to be completely honest with you, I didn't mark this at the time, but if we assume that this is the local swing high, what happens right here? What would we refer to this as right here? There's a few different answers, but there's one specific one that I'm looking for. PHH. Okay, good. So all great answers, but that's one of the ones that I was the other ones. If PHH actually, I think I never actually called it a PHH. I think we would just have it be a higher high, right? Because once it's a higher high, it is a higher high. It does break over and confirm. But then Junior comes in with because you all are right. It is a higher high. You're not wrong. Then Junior comes in with the other answer I was looking for, which is a failure to go higher, right? Because in theory, right, we break over. Failure to go higher is a principle. Failure patterns are a principle, much like the knock is. The difference is, so let me pause there and take this back to the knock thing for a second. I know this makes him out of left field, but I just talked about how the knock is only a principle, not a strategy or a setup, right? The failure idea is actually both. It's a principle and a strategy specific setup, right? The strategy specific setup idea of it is what we talked about right here, which is you would take your entry somewhere right here, right? This is where you would look to get short on this position. That's the strategy of it. The principle of it is that this buy setup should have worked and it is technically failing, right? So this is the kind of a similar idea, which is that the principle here is that because we broke over this previous resistance level and we actually got a close over it, in theory, we should have expected movement higher. When we don't get that movement higher, that's when we see the failure pattern come into play, where you can look for a potential trade in the other direction, or just let that pattern represent a piece of the puzzle that we are trying to solve, right? So in this example, something fails to go higher, and then it actually breaks through this support area and fails to go lower as well. And through this break, this should have gotten a very large breakdown, in my opinion, right? Let's talk about why. This should have gotten a large breakdown because not only are we breaking a relatively strong support area, right? Again, for the specific level, we dive down into the hourly, but we can refer to this as a reference point on the weekly chart saying, hey, this is a strong weekly area, and we just kind of got to slam down beneath it, right? Why aren't we continuing to trade lower from here, right? Not only that, but this break of support is coming after a failure to go a higher pattern. That gives it more power, right? In my opinion. And I think that, actually, no, not just my opinion, that is a note that you should all take. Things that break levels after failure patterns generally have more power, right? In theory. Why? Because and let's think about it from a psychology perspective. If you're somebody who was long NVIDIA here, you took a long at the breakout, or you sold some of your shares at the breakout, if you get a failure to go higher pattern, you're going to see an increase of shorts come in, right? To try and either make back their money from the long, right? Or catch the move down to capture extra profits on it, right? And this move back down through support, it doesn't surprise me that we break support after we failed to go higher, right? Because we just failed to go higher. So with it's like, why would we try and keep going higher again? We just tried that and failed. Market moves from level to level. Let's revert back to the lower level, right? And that's what sort of happens here. And in my opinion, if this had a weak close to it and a really strong close down, excuse me, a weak as in very strong, or weak, whatever, as in very red, a very strong trend bar, then we would have seen a larger continuation down in this. But we, as soon as this broke down, and this looks like a box, but it does have, excuse me, that was a bad click. It does have a wick there, whatever. It does have a wick there. As soon as we get back over that, right, as soon as we revert back here, this actually offers an excellent trade in the other direction, right? And as soon as we break the high of this bar, right, now we have a potential, a trigger entry, excuse me, I should say, not potential, to take a long trade to the upside. Or again, I don't want you all immediately starting to take every failure pattern you see, much like with buy and sell setups, right? Why, in my opinion, is this a good entry here? Because we broke a major support level and then failed to go lower, right? So again, similar principles up here. If we just broke a major support and failed to go lower, why would we expect the market to come back down and push back down? There's going to be loads of new longs in here because we just failed to go lower. Let's push back up to the upper end of the range and see if we can get a breakout. We've tested this area twice now. So the next time we test, we should expect a larger breakout, right? That's where the knockback principle comes in. It's all these things sort of lining up and culminating and coming together. And I hope that it's all clicking a little bit and making sense for each piece. I see the questions box popping up a little bit. I'm not going to switch back to it yet. I'm going to be very grateful for Mike and Ron to be on right now, because I just want to keep this rhythm going at the moment. So to flip to that chart and show you what that ended up being in the end, there's my annotate tool so I can clear this. That ends up being NVIDIA, and that is right here, right? And that NVIDIA failure to go lower pattern that takes out this resistance area, especially the failure to go higher high here, right there, ends up being the move that leads NVIDIA to go up over 100% in price, right? And you can capture an absolutely massive move. If you're judging your swing trade based off of a weekly chart, there's absolutely zero reason to sell this entry until it breaks out, right? Or until you get some sort of reversal action, and that actually ends up doesn't coming to like right here, right? So this leads you to a massive move on a weekly time frame, and it comes and stems from that failure to go lower pattern, right? So again, you will see these on all different time frames of all different types of things. There can be a failure pattern in hundreds of different ways, because anytime a bar is trending or moving in one direction and breaks the high or low of a previous bar and fails to get continuation, that should act as a clue to us, right? Not always does that act as the reason to enter the trade, but it always acts as a clue to us and being like, let's start thinking about what different ways this could go from here, right? And let's start examining that a little bit different. All right. So with that, I believe that we have covered a lot about failure patterns. So we're going to save this. Actually, this is time frame analysis. So that's going to come in the next lesson. So now we're going to move on to level. I'm going to check the chat box real quick. Solid. All right. We're just going to keep moving on here. So let me get a sip of my water here. And what we got to do is I got to make sure that I have my Thinkorswim pulled up, because we're going to do the levels on Thinkorswim, not on trading views. Oh, I just hate this box thing. I'm trying to make it bigger. Okay. All right. So cool. Level to level. This is the sauce. This is the magic. This is where you all are going to understand where we get, in my opinion, the most accurate support and resistance levels in the world, right? Remember, markets move from level to level, right? They have a purpose. They're not doing things unwillingly, right? These charts, that's the way that I approach these markets. So this isn't random, right? News might move it, but even if news moves it, it's moving it from level to level, right? Might something's moving on news. Well, yeah, it's moving from level to level, or it's establishing new levels along the way, right? So there's going to be some settings that you're going to need to set on your Thinkorswim charts or on your TradingView charts. We will cover that once we dive into the charts. Again, this is just one way to get levels. If you're someone who uses supply and demand or stuff like that, again, those aren't invalid. I'm not saying they're wrong. Anything that you use to get support and resistance levels that works and you consistently make money off of is valid, right? But for me and for every single person who I have ever taught these levels, they've abandoned everything else. Or not abandoned fully. There's a couple of people that still like combining with supply and demand and stuff, which is totally fine. But this is the way. This is the way. So just if there's anything to take away from this entire mastermind, aside from the psychology stuff, right? So if there's anything to take away just from strictly from a strategical perspective, it's the levels, because these are the sauce, right? So we got to cover some terminology first that I want to make sure that we're all clear on. So when I'm saying these things, it's not gibberish to you all, right? So write these words down or have them somewhere in your brain to be used, which, and we will pivot to this right now, right? So the first word is bar. I'm hopeful that you all know this by now because I've been saying it a lot. Bar is candle, potato, same thing, right? You're also going to hear me talk about the term acceptance. And this one is going to be a two-way definition because there's two ways that we'll use it, right? The first way of acceptance is that's how we define why we use bodies to find our levels, open and closes of candles, not wicks, because the bodies show where price has accepted, right? If you look at an hourly chart of whatever, and you see a couple of big candles with the bodies and the wicks, the bodies is where price accepted. The wicks is where price tested, where it traded. Like I've said before, to me, aside from buy and sell subs and for entries, the wicks are more a visual representation of tests than they are accurate for levels, right? So when we talk about acceptance, that's going to be in reference to us using the bodies, not the wicks. And then also general price confirmation is another way that you're going to hear us use acceptance, right? So for example, if we have a level at 101.50, right, and you're looking for acceptance above that level, you'd be looking for price to hold and maintain and possibly develop a trend above that level, right? That to me isn't like a candle close above the level. We use a different word for a candle close above a level, right? For me, acceptance is price action showing and developing trends above a certain level or below a certain level. So is there a firm sign stamp definition for, oh, is something accepting above there? No, there is no firm science definition for it. It's something that you'll learn with screen time and that we'll talk about, a lot more, obviously. But that's one of the things that is, again, this art rather than science, right? And so I hope that you all don't take that as like me, as like a way out for me, but it's just the truth is that like, there's not, if this was a science algorithm, everybody would just buy one specific trading algo and then just run the algo all day long. It would just be easy, right? Like there is no scientific way to consistently do this the way that we all want to do it, right? In my opinion. What is confirmation, right? Confirmation for us, confirmation closes is going to reference specifically to hourly candle closes. So since we use the hourly chart to gain all of our levels, when we get hourly candle closes through a level, that acts as confirmation to us. We have support at 100. If we get an hourly close beneath 100, right, that to me is going to act as, hey, we got a confirmation close below support. I'm going to start looking towards the next level down, see if we can develop some sort of trend, right? Wicks, how do we use them, right? Wicks to me are the visual representation of tests, of knock-knock steps. And we will talk about that more once we can dive into the charts themselves. But for levels themselves, in terms of you and I finding the level and marking it up and saying, okay, we have support at 101.27, we'll have absolutely zero to do with the wicks, okay? A pivot is a term that you're going to hear me use a lot, and it's another word for a level, but I also kind of just want to reference like a chart here. For me, a pivot is anytime that we kind of go from red to green and change direction, right? So we pivot here on NVIDIA. You can see we pivot right here, right? Here, we're moving down on NVIDIA, moving down, we pivot, right? So pivot is just more of, again, one of these general broader terms that we're going to be using to describe kind of like a reference point. But then once we're on the hourly chart, it's going to be a little bit more specific of to the level that we're watching, right? So then the level is itself is the actual, reference point that we're watching. And then reaction. Reaction is huge because not all reactions are the same. And this is going to be like in a giant concept to understanding the levels. And this, in my opinion, is why like we provide a daily watch list in our room, right? That Mike and Callan make, and it's awesome, right? And it gives people the opportunity to trade off of certain levels that are posted that day. However, in my opinion, can somebody be a successful trader if all they do is buy when something breaks above the level listed and sell when something breaks below the level listed? The answer is no, right? Because not all reactions are equal. Just because we break above a level doesn't mean we're going up to the next one, right? There's a ton of different ways that things can play out. And as we just discussed in the past, things can fail levels pretty easily, and failures of levels can actually offer great trades in the other direction, right? So and you all also wouldn't be here if you believed that you could be, a trader by solely following and longing once we break a level short. I imagine a lot of you actually lost quite a chunk of money by following so much just like that, not ours, hopefully, but those in the past, where people have said, buy calls over 112, it breaks over 112, and it's a failed breakout, you take a huge loss, and a lot of these breakouts fail, right? Or breakdowns fail. So really quickly, just to sort of expand on that really quickly with what reactions would be, right? So let's say that we have a level, and let me get the, let's say that we have a level right here, right? And let me make this a little bit thicker. Right, how do I do that? What? Sorry. Oh, visit. Nah, I don't care. Yeah, there we go. Okay. Right. So let's say that we have a level here, right? And then you have sort of a few different trends, right? Or excuse me, a few different reactions to that level. Gosh, I can never find. There we go. Oh, sure. Right. So one example of a strong reaction would be when something pulls back into a level, right? Kind of trending down, moving down, or just pulling back, depending on what the previous trend is. It pulls back to a level and has an immediate strong bounce and strong reaction. This is what we would define as a strong reaction to that level, right? That would be something that is a strong reaction. It doesn't always work like that though, right? Plenty of times where you see a type of reaction where you kind of get a pullback, you get a breakthrough, a pushover, a retest, and then continuation up, right? There's going to be plenty of time where you're going to see that kind of similar, a push down, a push up, kind of holds and consolidates here for a little bit longer, and then breaks back up, right? And sometimes it might not even break all the way back up, but the point being is that there will also be times where you get a pullback, something bounces off a level, sets a lower high, kind of bounces, consolidates again, kind of remains chopped. These are horrible drawings, but you all get the point, before breaking down and eventually breaking that level, right? So not all reactions are going to be the same, and we want to give some sort of definitions to a few of these. This is what we would look at as a strong reaction to the level. And this is all very self-explanatory, but you'll hear me say these things a lot, right? For example, today, SPY had, in my opinion, a very important level at 406.13. It's one of the ones that I have been watching for a while, right? This is virtually no reaction. We slice through this level, slice through it. We don't even retest it, right? And we don't even consolidate or bounce there at all. This to me was very weak. And if I had been still trading at the desk, it would have, taking a 5-minute or 2-minute sell setup beneath the level would have been valid based off how weak this reaction is, right? That's a very weak reaction to a level, right? If we scroll back a little bit in the market, this day right here, I remember it very vividly. We had a level, and we'll review this once we break down and think our swing charts as well. We had a level like 407.87, or no, it's not even. It was like at the wick of this. It was literally like at the wick. Yeah, actually, wait, I think I still have it marked from, oh, no, never mind. Yeah, we have a level that was a wick right there. We pushed down. I was looking for longs this day, as was most of the world. We pushed down, and within like 3 seconds, that test was tested level, boom, pushed up, massive move up, right? Now, why did that happen? Why was there such a strong reaction at this level, right? Probably due to some of the outside circumstances, like this was a gap up over the level, right? This was a gap up over the level as opposed to something like this, which was a period of like 5 days. So let me rephrase that. This had a very strong reaction to this specific level that was in there because this was a very nice, clean gap up over that level, which is one of our favorite setups, which we'll talk about way more in the future, where something gaps over a level, retests it before getting continued breakout. That's a good setup based on other factors, right? Now, that's why, in my opinion, that's why we saw this strong reaction to that level. Why did we not see a strong reaction to 406.13, right? Well, what had we been doing for literally 5 days before we even tested the level? Consolidating, right? Been consolidating. Now, we didn't test 406.13 specifically, right? And this is why I say the knock is not necessarily a strategy thing. It's more of a general principle thing, right? We didn't test this level, but more than once. We had a few other ones up here, right? But you could argue that the knock from one of the 407 levels or something, one of these ones that we had up here that are now invalidated, right, was so strong because we had been consolidating for 4 or 5 days that when we finally got the breakthrough, we started slicing through all the levels that we had there, and it was just a slam down. Why? Because of the knockdown, because we've been consolidating for 5 days. So the breakout of this range was going to be violent, and these levels weren't going to stand in our way, right? So I'm going to pause for a quick second to get some water. I see Mike with a great answer to a long question there. So thank you again. Again, I'm going to try and keep going here, keep the rhythm. Do not hesitate to ask in there. They'll answer. But again, if this all doesn't make perfect sense to you, even once we start doing the nitty gritty right away, it's okay. I don't expect it to be a perfectly clear right away, right? So these are the different types of reactions that you can see to a level. Sometimes they'll hold, sometimes they'll work, right? Again, our job is not to predict that a level is going to hold. Our job is to watch the reactions at a level and look for buy or sell setups that give us good risk reward at that level, right? Like if you had caught a short beneath 406.13 off of a sell setup here, you could have been risking the next level down isn't until like 393 or something, right? If this had played out differently and wasn't selling off so early in the day, already extended down, a break and sell beneath this level would have offered like a 20-to-1 risk reward ratio, right? It would have been something crazy. It would have been a very high risk reward ratio based off of where the next level was, right? Okay, so that is reactions, all right? Let's do it. Let's get down to it. Let's show you how to get them, okay? So here's what we're going to do. We're going to pause this screen share. I'm going to stop share. I'm going to first thing I'm going to do actually, I'm going to copy and paste this. Then I'm going to stop the share here. Where is that? Stop share. New share. Share. I'm going to do Tesla as our example. Why not, right? Of course, right? You has to. You has to. You has to. All right, we're going to go to an hourly chart. And when most of you will all go to an hourly chart, whether it be on TradingView, on Thinkorswim, it does not matter, right? The first thing you need to do is change a few settings on your hourly chart. So we are going to go up here to the settings wheel here. We're going to go to equities right here, and we're going to check a few very specific boxes. The first one we're going to check is this show extended trading hours. We don't want it. We don't want it. The second one we're going to make sure is checked is start aggregations at market open, right? And we're going to click apply, and your chart should change dramatically. Now, what does, everybody knows what's show extended trading hours, what that means, whether or not, right? Everybody will know that. But for starting aggregation at market open, what that does is essentially there are 6.5 trading hours in the day, right? If you show the extended hours trading session, what it will do is the first hourly candle of the day here. You can see how it's half in the pre-market, half not. That's showing half of pre-market session data. We don't want that. We want our levels to come only from these sessions to start. So basically this first hourly candle is only actually 30 minutes, right? It's only 30 minutes of real trading, right? Because one of those candles has to be only 30 minutes because it's 6.5 hour day, right? When you start aggregation at market open, what that does is that it puts the first hourly candle of the day to be 1 full hour. So this first candle here shows from 6:30 a.m. to 7:30 a.m. for me, 9:30 to 10:30 for some of you, right? That is a very important distinction. And that to me is kind of one of the reasons why we have some secret sauce on the levels, right? So those are the settings that you need to have on TradingView. It is very simple. And just for the sake of making sure that no one is left behind, I'm going to reshare my TradingView. I should have done that first, but I'm not perfect, everybody. I'm just human. I'm also going to show you how you do on TradingView, right? If you are on TradingView, SPY right here, right? 5-minute chart. First thing that we do is we go to the hourly. Oh, same exact thing we were talking about, right? You click right here and you go to regular trading hours, and that will show you the same chart. On TradingView, there is no need to set aggregation to market open because I believe it's the default. Mike, if I'm wrong, correct me, Ron, if I'm wrong, but I'm like 99% sure, right? So that is how you find them on TradingView. Okay, everybody good? Good. I'm going back to TOS. Well, again, one last time, I thought I saw somebody say something in the questions box. You click the settings wheel here, you go to equities, you unclick show extending trading hours, and you click start aggregations at market open. All right, that is how you get the settings that we want. Now, let's build some levels. So what we're going to do here is I'm going to start on these first few, and the first thing I actually want to do is I will write a text box with those settings out. 98% of our levels will come from the hourly chart. The other exceptions will be like previous day's highs or lows will sometimes come into play as targets mainly, or reference points. Then maybe pre-market high or low sometimes. But again, 99%, 98% come from the hourly chart with these settings. This is the chart that we want to make sure to be used, right? So with that, let's dive into how we start to pinpoint where exactly these are. So the first thing we're going to do here is dive through the last like 2 days of action on Tesla, and then I'm going to change this chart to a 30-day hourly chart, and we're going to go back in time and kind of pretend that we're starting from back here and mark and remove levels and show the reactions to them and show all that and kind of go back in time in reverse, right? So first though, let me describe and write some rules on what we look for. So hourly levels rules. 1, we look for trend changing moments. I'm just going to click off on the hourly and just keep it on that. We look for trend changing moments, and you can, simple way to think of this, red to green color change. I'm just going to put color change, red to green color change. Okay, I'm going to fill this out, right? If you've heard of order blocks, they're actually kind of similar to order blocks from what I learned, what I understand from a friend of mine who used to trade crypto. He trades crypto with order blocks, and Ron now trades crypto, and these levels are very, very effective on crypto, right? And so again, to sort of reiterate something, we do not use the wicks. We use the open and closes of candles, aka the bodies. Well, right. So let's look and establish those rules at first, right? These are our hourly level sort of rules, right? So with that, let's mark out the levels that we would have had strictly from today's action, only looking at this candle to the right and over. The only point in time that we have a trend change, right? Again, let me drag that right here for now. I'll just keep moving this around with where we go, right? The only trend changing moment, right, where we go from red to green, and what I mean by trend changing, not only beyond the red to green, because I don't want you to get fixated on the red to green thing, is that if you were just looking at this hourly chart by itself and watching it in real time, based off this first candle of the day, you would be expecting us to go higher. It's green, it's strong, it's a hammer, it pushes up. But from there, we stop, we turn, and we pivot, and we rotate down, right? We rotate down and we turn down. And this is where we want to create our first level because we have a trend changing moment at that level, right? We go down and we're going to scroll to the nitty gritty. This is how I do it personally. I zoom in, click, drag, and zoom. And I am going to take the open of the candle that changed trend, right? And mark it 763.65, right? That is the candle that changed trend. The first candle is the green one of the day that's moving up. Why are we putting it on this red one? Because that is the one that changed the trend. That is the one that shifted us from up to down, right? Or from up to consolidative in some instances, right? Again, I see some chat questions popping up. I'm going to have full faith in Mike and Ron to answer some of those, but I also encourage you all, let me explain before you start diving in with a ton of questions. Okay, I'm going to break all of this down. All right, so don't be so I started slanging or whatever it is. So on questions, yeah, bear with it, for a little bit, right? So that's the only level that we would have had developed from today. So with that, let's move back a little bit into yesterday's price action and develop one of the levels that we've had from Lynn's coaching. See, something similar happens yesterday. We have a strong push up early in the morning. We stop and we pivot here, right? We pivot with the color change from a move up into a consolidated period with a consolidated hourly bar there, ultimately leading to a trend change that breaks down from green to red, right? Where we change direction. So we do the same exact thing that we just did. We're going to mark up that level, right? 743.19. That is why today 743.19 is the level that we were watching, right? That was the key one because that's our level from yesterday. I didn't give two craps about yesterday's high or buying over yesterday's high or something like that. I was watching our level at 743.19 as our main reference point, right? Now, here is where things get a little bit formula specific, right? If you were to mark every single color change that you had on a chart, you would have a shit ton of levels. It would look like Christmas out there with all the lines, Christmas trees, all the lines that you have up there, right? So we need a system to figure out how do we erase these levels? How do we take them off our charts? How do we show us that the market has told us that these levels are invalid? And this is one of the areas where I differ from where Eric, the guy who I originally learned the strategy from, where him and I differ on the levels, right? For him, his firm rule is as soon as an hourly candle closes through that level, it's gone. That's the market telling you that it's invalid. So this 743.19 was in play for today and is now gone. It's gone. Now, what I do is not with every level, but sometimes what I will do, depending on how major of a pivot point it was, and in my opinion, this one was kind of a big pivot point, so I will kind of keep it marked up, is leave it with the dashed line. Actually, no, I'm not going to leave this one because we're far away from it now. I don't think we're going to rally up retest it, but you could leave it as a dashed line. So this is where, if you're looking for the firm rules to follow, the rule is remove it when you get an hourly candle close to it. Some mastermind students have found that they like to leave them on for a little bit, for an extra day, make them dashed so that they know it's an old hourly level, right? I lean more towards, like, I'm half and half. I really can't, sometimes I leave them on as dash, sometimes. So if you're looking, the specific formula is for this is remove it upon a closure to it. But sometimes I would encourage you to leave them on as a dash line sometimes and see if you think that might help you out a little bit. Other reason being is that if we don't have this dashed line here, Tesla technically has no levels to the upside till 763.65. We have no levels, firm hourly levels on this chart
up until there. So you could look at that a few different ways. If Tesla somehow gets some sort of rally up here, you could use this level 743.19 as like a little stopping point, right? As a weaker level, as a reference point of that. Or if you removed it, right? Maybe that would be the thing that leads you to allows you to hold that move all the way up until that next level, right? For me, that's part of the reason I was able to hold Tesla so long today is because over 743.19, and this is going to be a little off because I didn't zoom in, but just, yeah. Over 743.19, or 20, whatever it is, that we technically had room all the way up until this level right here, which is where we stopped and turned and pivoted last, which is where our target is 773.80s, right? So that is why I was able to hold Tesla for a large portion of the move, is because I knew that we had real room up into the next target, right? If I had left an older level on, I might have tricked myself out of that position a little bit early, right? So there's give and take when it comes to leaving levels on. Again, if in your learning stages, don't hesitate to just be, I'm going to be firm for now and follow and remove all of them. But if you want to try and give yourself a little bit more levels to work with, so things don't seem so far away, just turn and make it dashed for a couple days and then feel free to remove it, right? But for me, yeah, so that was one of the distinctions between me and that. But so let me write that down as well here. After an hourly close through. Right, so that is when we remove an hourly candle, is remove a level is once we've gotten a close through it, right? So let's continue to mark this chart up a little bit. Moving back, we marked the action that we saw from here, right? The other level that you could have put on, right? We did have a red to green color change here. We were going down, down, down. We turn green. So in theory, you could place a level there, but wait, the next hourly bar does indeed close through that level. Oop, that's way too zoomed in. The next hourly bar does indeed close through that level, right? And beneath it, right? Because if you place one here, the next bar closes through it. So it just gets removed, no worries. But because we did try and rally here a little bit, it would put a level into play at right there at 727.07, right? Now, which to me is the more important level? And this is the first time I'm going to pop up the question box in a little bit. What's the more important level coming into today before anything has closed through it? What's more important to me? Doesn't matter where we open, right? Well, I guess actually, no, that's not true. It does matter where we open. But in general, what is the stronger of these two levels? You guys are all on top of it. Yep. So the 743, right? For valid reason, right? That's a strong push up that fails and rejects. This is more of a consolidated stopping point before eventually turning and rolling down a little bit more. Still a level, but for me, I kind of have my priority on, on those. And so that to me, so would I keep this here as a dash level afterwards? No, I'm not really interested in keeping that one as a dash. But if we do flip to a 5-minute chart, you can see we did get a reaction at that level, right? 727.09, a break beneath 1, 2, 3, 4 tests of that level, right? Before eventually breaking down. This to me is a great example, and I'm going to pause and stop share. Gosh, I love it when these things start to come and work together. That to me is an excellent example. Where did our reactions go? Oh. Of a weak reaction, right? Again, we didn't draw one for one that consolidated underneath the level, but boom, breaks, consolidates, boom, right? These are weak level reactions. These are stronger level reactions, right? Right? That comes picture perfect from what we just described on the previous one, right? So sorry for the hop in between platforms here, but I thought that was just a great example, right? And again, would I have taken this Tesla short? Nah, probably not. I mean, come on, we had just sold off from 763 down to 727, and there was about 30 minutes left in the day. I don't trade the last 30 minutes, Had this happened at the open, though, that would have been freaking gorgeous for a potential short entry, right? If Tesla had opened flat and given us this price action under the open and under the level, that's exactly what you're looking for. And you could have taken the sell setup here and you wouldn't have gotten stopped out over its high, or you could have taken the sell setup here and you wouldn't have gotten stopped out over it. Both would have worked, right? Okay. I think that everybody is following along relatively smoothly. Yes, weak as in bearish, right? So again, it's bearish in this case because why is it bearish and being weak? Because it's a support level, right? So it's weak because it was bearish. We pulled down, we pushed under, and it ends up being a weaker reaction to the level, right? Again, or a bearish reaction. No, I'm sorry, that I can understand how that could get confusing. Let me pause and reset there. There was a big reaction, I should have said, meaning that the level, it actually reacted, right? Whether it reacted in a strong manner or a weak manner, it reacted. As opposed to, unlike something like SPY today, 406.13 didn't even really react, right? We just sort of sold through it, right? A strong reaction to it, something would have been strong, is if it holds that level and gets a strong bounce off of it, right? We did get a big reaction, just wasn't strong. It was a big weak reaction, right? Because we got under it and we were very weak under that level, right? We were very weak in continuing sell side. So good clarification there. I hope that hopefully that all makes sense. And that this was also, try not to let my words confuse you and overthink it, because it should be straightforward, right? If we break the level, consolidate beneath it and kind of chop right here, that would be weak. Now, does that mean that we can't pop back up and take out its highs? No, absolutely not, right? Of course we can do that, right? But we just have to kind of work with what we're given from a price action perspective and from a level perspective, right? Okay, cool, perfect. All right, back off the question box. I think that was a great clarifying question. So let's flip back to the hourly chart here and kind of drill through this a little bit more here, right? So the other time, let's see, we're gonna have now that we know the price action, we're gonna remove this one and keep moving back. No level here. The last level that I would see aside from that, right, in this day's price action is right here. We push up, try to sort of push down, and guess what? What do we trigger right here? What actually gets triggered right there? 1, 2, 3 is not wrong. It's kind of more of an outside bar or outside tail. No. Sell set, right? Right. It's a sell set, right? If you look at the price action that we've had, we have lower and highs, right? Push to new lows, kind of another push up to new lows, then it's push to a new swing low here, then a rally up within a downtrend and something that breaks the previous candle's lows. So that is technically a sell set, right? It just ends up being one that fails, right? Now, would we have taken this short? Again, not necessarily. I don't think that there was a whole lot of edge here to be had on that short, but also being that we were above the opening print when it happened. But because we failed the hourly sell setup and because we color change there, and there's a swing high and a pivot there, it gets a level. So 708.49 is going to be in play and likely going to be, it was in play and is still valid and will likely be in play for tomorrow, right? Now, moving back a little bit further from this, we actually don't have anything else, right? Because this level right here that would have been there or in place is closed through on this day. So we don't have anything there, right? Now, why is this green candle not a level? Why is this one not a level right here? The reason being is this previous bar was green. So there's no color change there, right? Again, I don't want you to live and die by the color change, but for gaps, it's going to be important, right? If this was a red bar here and we gapped down and started moving back up, that would have changed the trend. It would have been a move down that shifts to a move up, right? 1, 2 shifts. This does not shift anything, right? We move down here, we gap down right there and then continue moving up. To me, I don't have a level there. That's not a level. You can maybe put a soft dash one if you want, but for me, no, not. But guess what? What about moving back to these sort of previous days, right? And again, you can see how a level was right here, and then it got closed through, right? It got closed through, so I'm not going to take the time to mark it up. So we're just going to keep navigating and sort of weaving our way back through this, right? would this be a level right here, right? Right, let's see, right there. We would actually end up marking a level right there. Reason being is here we have a coverage. We have an attempt that pivots and attempts to hold here and then gaps down, right? And so that is why you would place a level on a gap up or a gap down, is when it does include a color change or it's a huge gap. So the gaps are the one part about this that is tough. And I imagine even Mike and Ron might still have a few lingering questions every now and then about where a level, where it's been, because again, this is where it's art more than science. So the gap thing, you all are going to have questions about this for the rest, and previous members of Fast Lab. We're going to be nailing down specifics throughout the course of it. But the most simplest way to think about it is that if there's a color change within the gap, it's a level, right? If there's not a color change within the gap, it's not a level, right? So from here, though, we do have a level there, but it gets removed because we get that gap, this move up, that gaps up through it and closes through it. We remove it, so that gets removed, right? So through this into today, right, or into tomorrow, excuse me, through today, the only levels in play, and actually I got to stop and pause because I missed one here, right? Which level did I miss? Boop, 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 right here. Right there, and it's no surprise that we actually got a retest of that 717.54 yesterday for a nice clean move up. Where pretty much exactly did that tick? We roll down into a 5-minute chart. We look back on this yesterday. Tesla comes back, retests. Pretty much to the tick, everybody. That's a great example of using a level as a reference point, right? We have something that's been moving up to close the day. It has a level that it does not close over. We get the gap up, the retest of that level. And for me, I would take longs, not buying them at the level. I would buy them as we get back over the open personally. I think that's the safer way to go about it. But nonetheless, there's just a great example of a reaction to a level, right? Now, this isn't a major level. It's not a major swing high or a major swing low, right? But it is that color change, and it does give us a level there, and we have not closed through it yet, so it remains in play. Does it surprise me at all that we stopped today where we did, about 20 cents shy of the level? No, it does not, right? It does not surprise me that that is roughly where we stopped, right? So I know that there might be some confusion on this so far, but I just give me we're over an hour in right now, and I just want to do a check-in and see sort of, is the general concepts of what I'm saying in these rules making sense of where we look for levels? Yes, 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 yes. Okay, cool. There's a few no's, and I get it. The gaps part will be confusing. But there's a lot of yeses, and that makes me feel good. Rick, don't worry about it. Kendall, don't worry about it. We will get you all up to speed. And those kindas, yes. I know there's some kinda. So again, you're gonna have to rewatch this one for sure. It's not a specific science, but if we refer to our rules, right? Again, at its most simplest form, we look for trend changing moments, thinking from red to green, right? I'm going to remove this order blocks things because I don't know if any of you are familiar with them, but they're similar in principles to order block. Right, so we look for trend changing moments. The trend changing moment from today is when this candle pushed up from red to green, right? So this would be our level going forward. So now what we're going to try and do is mix it up a little bit and see if it helps to kind of go from a backwards perspective, right? What we're going to do is scroll all the way back and tell it Tesla kind of has a nice clean trend here. And we're going to pretend that Tesla IPOs right here. Tesla IPOs, and we're going to mark up where there would be levels according to this chart, right? I'm actually, let me see if I can increase. No, I can't. Okay. So the first one, we can't zoom to the left anymore because this is just where the chart begins. The first level here that we change trend is right at this pivot right here, right? Why? Because in the opening candle of the day, we have a relatively bearish candle, right? It's red. We push up with a high wick. we attempt to go higher, and we end up selling off and closing near the lows of this bar. But by reversing and changing the trend right there, that is where we establish our first level, right? Does that make sense to everybody or most of you as to why in the very beginning? And again, what we're doing is going through this pretending we're starting at this day. So assume that we know nothing about how this finishes up. Assume we know nothing about from here over, right? All we're looking at is forming these in real time. Does it make sense why there is a level right here? Cool, right? Yes, awesome, right? Awesome. Then we rally up and we establish some sort of resistance here, right? And we set our next trend change. We change and we pivot, right? So again, referring to our rules, I don't know where the rules went. We gotta drag them back over. Where did my rules thing go? Oh my God, I cleared the drawing set, which accidentally cleared the rules. I'm stupid. Okay, I'll draw them again. Don't worry. I'll write them out again. Sorry about that, but no worries. Let me actually do that really quickly right now so we can just have those drawn out again. So let me just 1 second, bing, bang, boom. Take this out just so we can get it. One, two. Sorry about that. I don't know. I just said the shift undo. I gave up on it. We're here. We made it. Okay, so we're pretending we're back over here, right? Now we form a new level right up here at this resistance point. Right here, right? Oops, text box. Okay, so day goes on. Tesla continues to sell off. Oops, we accidentally, or not accidentally, sorry. We actually close beneath this level. So what happens? Bing, bang, boom, it's gone, right? Because we remove our levels. We remove our levels as they get hourly candle closes through them, right? So that gets removed. Tesla opens up, continues down, opens up the next day, opens with a red bar here, red after red, right? God, I just got myself confused a little bit too. Right? For this opening day candle, shit, what was I going to say? Because it is a gap up. God, the gaps even confuse me sometimes. But for the time being, I'm not going to mark a level there. I'm not going to mark a level there, and we're going to focus on because it's a red to red, right? So trend does really not change at that area. Now, that being said, we're not marking a level here. Why? Because we were red candles right here, right? We were already moving down. This doesn't really change anything, right? Now, intraday, though, this is still the opening print for the day. So this still is going to act as a key level for that day, right? And you can see we push back up towards the open and kind of get a reaction, not exactly at it, but near it, right? So it's still in play, right? It's still in play as a level overall, right? But we're not going to mark it up there because it goes red to red there, right? So continuing down, Tesla sells off and it establishes some sort of support here before ultimately flipping and changing color. So we are going to mark this up as our level. Right? Hopefully that makes sense to everybody. Right? And I guess I should clarify that in case for those who haven't, because I just assumed a lot of you have been following me for a while and I appreciate this a lot. The opening price for the day is always a key level for that day. Always, 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 always. I just don't want to mark up every single open, you know, that'd be too much. But the opening price is always a key level, and it's really one of my favorite things to trade. And you can actually see a ton of reactions to it just on the charts that we're seeing right now, right? Let's look back on this first day that we were looking at, right? This is the opening print right here, right? Once during the midday, we actually come back and retest the open and push back up. And we know that we close up here, right? We know that we close up here because we go in because of where this candle closes. So it wicks the open and then pushes back up, right? Here, you can see we rally up towards the open and then end up selling off, right? Here, you can see if we mark the open, and I got to remove this just so it doesn't get too crowded. Here, we have the opening print for the day, right? One test before pushing back up, one test again, before eventually getting a larger breakdown, all centered around the opening print, right? So the open is always a key level for that day. Always, 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 always going to represent a key level for that. Yeah, and I don't leave the only time I will leave the open marked is if it ends up being a key level from the hourly chart, right? If it's a key level from the hourly chart, then I will leave it on marked if it's a gap level. But usually, no, I remove them after that day. For me, it's relevant mostly for that day. Yeah, and Mike finds, yeah, so Mike finds you're gonna tweak, you're all gonna tweak this a little bit. I tweaked it a little bit. Everybody's gonna tweak this their own thing. The main sauce that you need to have firm is where do the levels come from on the trend changes, right? So okay, let's move back in time. Right at this point, we've just gone back down here, right? These are the only two levels we have. We move back up here on Tesla, and right here we get this color change, establishing a new level here, right? So we're going to go ahead and zoom all the way in and make sure that we all get the exact same number. It should be the exact same number no matter if you're on TradingView or Thinkorswim, because it is just where that candle opened. The few cents, it's okay if it's a few cents off, but you do want to try and be specific. Some mornings I'm a few cents off, and it won't be the end of the world, you know. But after these first 2 days of action, these are the three levels we have, right? Again, we are ignoring from here to the right for now. Do we all understand why there is a level? Why there's a level up here that's never gotten a close to, right? Again, we're only looking at these first 2 days. We understand why there's a level right here, why there's a level right here, and why there's a level right here. That clicks with everybody? Awesome, let's go. A few yeses. I know it won't be everybody. But a bunch of yeses feels good. Okay, now we move up and we continue on to the next day, right? We get this nice sort of gap up here. It doesn't gap over the level, but it does give a nice break of the level, right? It does give a nice break of the level, and they close through, which means we are going to remove and take this one off, right? Now, after we get the close through, it actually turns out that we stop, turn, pivot, and get another level in there. Now, a little bit of a little side bit, a tidbit of information, which I might end up regretting giving this to you now, is that if we have this one marked up from right here, Julian, it doesn't matter, different stock, different example. The levels are the same on every single stock. So I'm trying to make sure that you all understand the principles of this, because there's a bunch of nuances for it, but it's the same on every chart. So it really we're not going to move on to a different chart. You can see here, right? One of the things to note, and I want to add this in a text box, for our system, one of our favorite setups is a gap over or under a level, right? I like when things gap over or under a level. To me, the gaps over tend to provide a little bit more confirmation that moves will get follow through, or you can play a failure using the opening print as your main reference point. So I like gaps over or under levels, right? So if we look back and you ask, hey, Chase, we broke this 708.99, but we really didn't get much follow through up. Why is that, right? Well, first, we just don't always get much follow through up, right? We don't always get, things don't always work out that way. But then if I skipped this Tesla trade and later in the day you ask me, hey, Jake, we broke 908.99. Why didn't you go long for the move up, right? And again, I don't know, I might have in this moment, but if I skipped it, one of the reasons that I might have skipped it is because we didn't gap over the level, right? By not gapping over the level, that to me showed a little bit of not necessarily weakness, but Like if it would have been a better setup, it would have been better had we gapped over the level, right? Because then especially we can retest the level, get back over the open, and that will provide us with a really nice long opportunity, right? So why did we not get continuation off this one? In my opinion, part of the reason why is because we did not gap over the level, right? One of the many reasons why, assuming that there's other factors along with the chart, right? So we remove this one, we set the new one up that we just mentioned had been established right there around the 917 level. And let me actually make sure that it's very specific so that we get it down to the cent. And oh, it's exactly 917. Cool. All right. So it's exactly 917. And what do we see from Tesla? I actually remember making a reel on this a couple of days later. Right? A couple of days later, we actually see this 917 being a huge level of resistance that we are failing to get any sort of hourly closes over. We revert back to our rules over here, right? Confirmation to us is hourly closes above and below. So if you got stuck in a Tesla trade right here, say you got stuck in the first stab trying to day trade it, that happens sometimes. You don't have to wait for an hourly close before you get long on the first, you know what I mean? Like, otherwise, a lot of times you miss a lot of the moves. So I'm not saying that. But if you were looking for like a Tesla swing trade or something, right? And you were holding it, despite the fact that we consistently were getting failures to close over the level 1, 2, 3, 4 times, right? Then you're ignoring, we didn't get confirmation, right? So like if I say in my Rakes plan, hey, I'm going to be looking for Tesla swing trades if we can get confirmation closes over 917, this is why, right? We never got the confirmation closes over 917, right? So continuing on here to mark up these levels, right? For me, or excuse me, we had one right here. This gets, actually, I just removed it automatically. We had one right there. This gets removed as soon as we get the close through that on this day, right? So we remove it, we pull back into here. And here we have a red bar that gaps down and changes color with a green bar. That to me is where we mark a level. That's a gap example of where we would mark a level because it is a change in trend there, right? The trend is moving down and it changes on this gap down. So it deserves a level. Let me mark it up again specifically. Sorry, I rushed that. Right there, yeah. $860.76 it looks like, right? You can see later in the day, this acts as a nice little reaction point. We pull back to that level and we hold. Now, guess what? We do form another resistance level right here, but we end up closing it over later in the day. So no need to mark that. Right here, we do actually get another level that forms, right? We get another level that forms right there at 862 and change, right? Why? Because we go from red to green. We have a pullback that changes color. Now, Jake, what's more important, 860.76 or 3062.32? On a name like Tesla, $2 or $1.50 in range is nothing. So both of them to me are equally as important, and you could consider them a range. But if you wanted me to make me choose one, I would probably watch the lower one as being more important for like a breakdown type of move, right? So coming into now, these are the only levels that we have on our Tesla chart, these three, right? 917, this pullback to 826.93 in this opening, this pullback from this change right here. We move up, we rally to 917. Again, same thing as right above. We develop a few more little levels, but they're not really meaningful relative to the 917. 917 is going to be the most important one. And, you know, I don't think you need to put, you know, another one right there at 914. That's just, you can, but it just, to me, would be kind of overkill, right? Move on into the next day. You can see actually, before I do that, we do actually have a little red to green pivot right here, right? Zoom in, and right here, we get the red to green. It looks like it is 904.55. 904.55, right? Interestingly enough, what we just talked about was the opening under or over levels, right? Here, Tesla looks like a bull flag, right? It's a strong move up. followed by a period of consolidation under a resistance level at 917. But what happens early in the day when on the next day when Tesla opens up? It gaps under support. It gaps under the level, and then it rallies up to test one of our support levels, one of our resistance levels right there, right? And actually offers a nice short trade early in the day. May not look like it because of how the hourly chart looks now, later in the day, right? But at the time, we were seeing a failed test of a resistance after a gap under our level, and then it breaks beneath the opening price, which would have allowed for a nice little short opportunity. And Tesla ended up moving down about $15 from that, right? And or actually ultimately later in the day, more than $20, right? So you could have potentially caught a $20 move down, shorting that gap in failure back underneath the level, right? That being said, that level ultimately gets removed later in the day, and we end up marking one right here. Right, this may seem repetitive to some of you all, but it's important that we go through it, and you can also see some of the reactions in real time. We also have another one that you could mark right there. Again, we can see the next day that level becomes invalidated, so I'm not going to mark it up. I'm just going to sort of start moving through here as we are getting close to the 7:30 mark. So I want to do a quick check-in right now. How many of you are completely lost? You have absolutely no idea. You have absolutely no idea how you would mark these levels. You're very lost. You're confused. You're like, God, I need to watch this 50 million times. Anybody feeling like that at this point? Please don't hesitate to say yes. No one's going to make money. No one's going to get in shit. Okay, Rick. Okay. Rick, DM me on Discord for sure, so we can make sure to say you up. Okay, Mike, let me wait till the end before, and then I'll pass it over to you. Yes, Christian, I saw your earlier question about, do we target levels as our targets? Yes. Typically speaking, the next targets we have are levels. 98% of the time, it comes into play. Sometimes it will be like a previous day low will be in between the next levels. I use that as another target as well if I was short, stuff like that. But usually things move from level to level, right? Okay, so I'm seeing that there's most of the consensus is that everybody's going to need to watch this again. Everyone's going to need to watch this again for this, but I'm hopeful that you understand the general principles based off of the rules that we've established here, right? And again, the most simplest way to do it would just be to look at the Tesla from earlier in today, right? Earlier in today. And if we're following our rules, right, our level is that we look for trend change in color moments on the hourly chart, right? This is where we have that trend change. We go from up to down, right? All right, so everybody, I'm hopeful that everybody's grasping the general principles of it. There's no way I could explain these to you all perfectly in an hour, so it is definitely going to take some rewatches of this. Color changes on gaps get no level, correct? No, not other way around. And so right here, so for example, right? This is bar, and this day closes red. The next day we gap down and turn there, and that's a color change, right? For me, I do put a level there. That's where I do have a level. On a gap down that changes colors, that's where I will have a that's where I will look to. So I got lost in my words there. I would put a level there, right? Because we gapped down, but we technically did change trend there, right? The trend changed. We were moving down, right? And changed that. So Jennifer, so I hesitate to say that any color change is a strong level, right? Because, for example, I wouldn't necessarily have, actually, no, for now, yes, we're going to use that as the rule of thumb. If you have a color change on the hourly chart, you are safe to put a level there, right? Now, not every level is known the same, and that's for the same reason that we talked about earlier in here. To me, if we're looking at this day in the middle, right here, and the two levels that we have are right here and right here, those two levels, just because they're both color changes, are not equal to me, right? Like this one is where we really changed trend here. You understand? We were moving up and we stopped and pivoted and moved down. Here, we were moving down, we stopped for one candle, and then we turned red again. So yes, we're going to mark that as a level, but if you're asking me which one is more important coming into the day, I'm going to be looking more at this one up here where we have more of a stronger, a major level. It's major one, right? There's more of a reaction at it, right? Exactly. The stronger the reaction, the stronger the level. I think that's a good way to phrase it, right? The stronger the type of reaction, I think the more important and key level, right? But yes, the color changes is big, right? All right, everybody, we are 90 minutes in. What I want you all to do is, if you're confused on this, don't worry. We have until next Tuesday before we have another lesson, right? We have until next Tuesday. We'll do a trade review after tomorrow too, for sure, to see what kind of action presents itself. If I trade, I'm not 100% sure I'm trade, but if I do, we'll do it. I assume I'll take a scalp or something at least. We'll do a trade review and we'll check back in. But what I encourage you to do is, before we meet again on Tuesday, I want you, anyone who's confused, to have rewatched this at least once, right? You got to rewatch this at least once, right? And see if that kind of eases some of your confusions. Other homework I want you to have is try and mark up a few charts and post them in Mastermind chat. We have an army of 100 people plus that are active in there that have taken this, that can help you confirm whether a level is a level or not. And also, they are probably looking to get some sort of confirmation on their levels. And of course, me, I will respond, all the mods. We have a lot of people who can help you confirm whether you're right or wrong. So I want you to mark up, go through and start marking up a bunch of charts and come in and say, hey, would there be a level here? Hey, would there be a level here? Hey, would there be a level there? Hey, would there be a level here? Right? Mark it up so that before we meet again on Tuesday we're scheduled to talk about multi-time frame analysis, multi-time frame analysis as the bigger part. But if we need to stop and recover a few topics on levels, we will, right? The way I have this structured is that by the end of week 3, I've covered the vast majority of the material that I want to cover, leaving us flexible to spend more time on the topics that we need to spend more time on, right? So if we need to spend more time on the levels, then I would rewatch it, right? I would 100% rewatch it, right? Yeah, Gabriel, for you, somebody who already knows the system, you knew the levels previously, maybe rewatch it because I use them a little bit different, but yeah, you might be a little bit of an outlier too. But Ron literally, you told me he's watched Mentorship 1.0 4 or 5 times by now. Jill has watched the levels 5 times by now. Like J-Dot has watched the levels 3 or 4 times by now, right? Like there's been like 1,000 views on that video, and I do not believe that people are sharing it with other people because everybody is so like tight knit in our group that maybe somebody from the first class shared it, but really I think what that is that those views are from the 200 people that were in the first mentorship. 250, tons of them have rewatched it like 4 or 5 times, right? So I really want you to rewatch it to grasp it. I asked Eric and rewatched them hundreds of times to relearn it, right? So there's some complication. Some of you, it might seem very simple. Some of you, it might seem like there's some nuances and details that you want clarified. But the market moves from level to level, right? If we look at Tesla, let's just look at the last thing we'll talk about tonight is why I am swinging. Yeah, I'll post the slide. Why am I swinging the Tesla puts targeting that 655, right? Well, Tesla has this little stopping point level here at 708.50 or whatever the exact number is. I don't want to zoom. I'm lazy right now, right? But beneath that, where's our next level? Well, what about right here? Oh no, that got closed through. Well, what about, oh no, that got closed through. Well, shit, our next level is all the way down right here. Does that mean Tesla is automatically going to sell down there? No, for sure. It could 100%. It could 100% stop and turn and pivot somewhere else, right? And create a new level. But for me, this intraday pivot is the most important level that I'm gonna be watching? 653-ish area, right? The 655 strike is what I'll be watching on that. Right, so that's going to be where I'm targeting. You can see we actually had a very nice reaction to that level on this day before getting a move, a 50 or 60, $70 move up. Right, so another example of the levels in play. Right, so with that, no, you do not have, Justin, you do not have access to the Mastermind One videos, and they don't have access to your videos. I want to try and keep that. The only one they have access to is the only one they have access to is the one lesson one, which had interactive brokers on it, because I didn't trade on interactive brokers last time. And I felt like if I had changed, I wanted to teach them, the part that I had changed with interactive brokers. I thought that was fair, but they don't have access to any of your lessons. I don't think that's fair because you all paid a different price than they paid, so they don't have access to yours. You don't have access to theirs. I think we keep them separate. That being said, the material is the same. I think I've presented the material slightly better in your all lessons. Truthfully, I think the levels lesson went a lot smoother now than it went in the previous one, but we'll see, right? We'll see. So let me see. I saw one other question. Okay, two other questions I'll answer before we hop off. So the first one is how many days should we mark levels in the past? How many level? The first one was how many days you mark level as far back as you need to, right? As far back as you need to in order to find the level. And then the other one was how do you know this works? Why does this work? Or what? How do you explain something to this work? I have no idea. This is how I learned it. And then but my theory would be that algorithms use it. Algorithms use it in some sort of capacity. So why is 653.39 more important than this one in the 662 area right there? For me, I prefer, and this is going to be a preferential thumb, and that anything that occurs intraday is more important to me than a pivot that is a gap pivot like this, right? So Tesla, these are 5 points away. Tesla might end up stopping at 661. My spreads are there. Anyways, but for me, this isn't like a gap that really it doesn't change anything, right? Like if you even look down, if you go back to this one over here, right? This gapped fully underneath the previous day's range. This gap down completely underneath and outside of that one, right? This over here, this is again where it comes in. It's not a science, it's an art, right? There's not an exact answer for everything. The reason I know is because this gap up is still inside of this range right here, right? It's still inside of that right there. So just trend change there, yes, but less so than trend changes on this gap. Do you understand, right? Because we gapped fully outside and underneath of the previous. This one, we gapped up a little bit from where we closed, but we just gapped up completely inside of that range right there, right? And so these levels being close together, for me, the priority, especially given that we've already tested it once, is the 653.39. That's going to be my priority. How many levels should we have? Is there a rule for that? No, there's not a rule for that. But if you have a couple right next to each other, let's say, for example, you decided, which is totally fine, you decide that you want to tweak the system a little bit. You like these gap levels like this, and you want to keep this one active, right? Okay, that's fine. That's totally cool with me. That's valid, part of the system, all good. If I catch you trying to take a short trade from Tesla 661 to Tesla 653, I'm going to be like, dude, what are you doing? Right? That to me isn't a trade that's worthwhile, right? So how many levels did you have on your chart? Depends on how many that have there. How many should you pay attention to depends on how wide they are. Apart from each other, right? To me, Tesla, is it worth aiming for a $6 or $7 move on Tesla? Probably not, because if you have to find a buy or a sell setup, your stop is probably going to be $3 or $4 wide anyways, just with how big Tesla candles are. So that's not really worth the headache, right, Julian? So how many levels should you have? In my opinion, less is more, right? The less levels is more because the market really moves from level to level. Okay, last question, then I'm getting off because I want you all to rewatch this before you keep asking questions. Because, for example, Julian, why is the 7085 a level? It's a level because we go from red to green right there, right? tempt to sell off. We actually talked about this earlier in the video, which is that that's a failed sell setup. That's why there's level up. So because you asked a question that I've already answered earlier on in the video, that's going to be our cue to stop right then and there, because this is not Q&A time. And also I answered that one earlier. So I want you all to go back and rewatch, because most of these answers you will find within the video, right? So hope this was all helpful for you all. This is the secret sauce. I know it might be confusing, but I want you to go back and rewatch before we start overloading with questions, because it's going to take you a few lessons, a few watches to fully grasp each specific nuance and detail of it. Right? Okay. So can't believe how much sauce I just received. Thanks. So helpful. Got it. Thanks. Okay. Last things last. Gonna do the quick great session. Yeet, 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 yeet. Just yell it one more time for me, because I love you guys all so much. My camera's slipping. Levels lesson. Let's go. Woo, woo, woo. All right. That's the sauce. If you're confused, don't worry. Don't hesitate to DM me, Junior. I saw your message too. I will respond to what you said on there. Yeah, and Mike has an announcement. Mike, go ahead and unmute yourself. I don't have a speaker on, so I can't hear you. But Mike, all you.
All right, guys, I just put this in the mastermind chat, so go head over to there real quick. In terms of TradingView, this is only for TradingView. If you have different tier systems of TradingView, you will get different levels. This top one that says 1 per second. If you only have the base level TradingView plan, which means you log on to TradingView and you start charting, you will get a different level than what we get on Thinkorswim. Now, if you have a plan like the Pro plan or the Pro Plus plan, but you don't have real-time data, refer to that bottom section. You will still get a different level because you don't have real-time data. So that example with Tesla, the level was, it was 827, or 826.96. Back in that example on the 28th, I'll put this example in the chat as well, with all three levels that can possibly come out of this. So let me put that in real quick. That level from April 28th, with the basic plan, without real-time data, that's your level. With real-time data and one of the Pro Plus plans, that's your Tesla level. So you will get different levels based on different things if you have different plans of TradingView. So I recommend, if you want real-time data and you want these levels accurate as possible, either just chart on Thinkorswim or get one of the Pro Plus plans and then get the real-time data. It's only $2 a month for the NASDAQ data and $2 a month for the NYSE data. If you have TOS, you're good. I don't use any other brokerages besides TOS, but I assume, you know, they'll be good as well, like an E-Trade or something. I have to double check that, but hope that clears up the confusion if you got different levels on TradingView. If you have any questions about that, just ask me in the chat and I will answer those, but that should clear everything up. So that's all I got.
All right. We good? I see some thanks, Mike. We good. Perfect. All right, everybody. I hope this was helpful to you all. I know it might be a little bit confusing, but this is the one. All right. So study. Can't wait, and I'll see you all in the chat. All right. Good night, everybody. Love you. Yeah, you're right. I said it. You heard me. I said it. Love you.